Hello, everyone. Welcome to Market Pulse episode for the week 21st June 21 to 27 June 21. I am Ajit Mahuli, the co-founder of LearnPriceActionTrading.com. Uh, Please go through this disclaimer. Market with Solutions LLP is not a SEBI registered entity, advisor, analyst. The session is purely for informational purpose to create awareness in the general public and does not constitute a recommendation or advice. All the views expressed are personal. Let's go to the markets and take a look at the indices, what the markets are doing. So, as expected, markets were range bound even this week. And last Monday, we saw that there could be a selling pressure that could come in for to the markets, and uh, markets started moving up from this area of demand zone. All right, so that is the demand zone that markets are still holding. We have multiple levels of demand zone on the daily chart, so that is another area of demand from where market could have turned up, but this demand zone is holding up. On the supply side, we do have a weak supply. It's not a, I would not call it a great supply zone on the daily chart. That is where we had a pretty good fall coming in. And yesterday also market gap down, taking cues from the global markets, but recovered smartly to end at flattish or in positive at close to the day's high. So that's a good sign for the markets. They remain bullish. On the weekly, we see a bullish candle happening. So, but still, we are not completely out of the woods. Remember, this week is an expiry week and markets could remain range bound. Let's take a look at the smaller term time frame to find out what could be that range. So this is the area of supply which has been holding up market for the last few days, and today again it has closed in that it has still not taken off that supply zone. Remember, once we take this supply off, we will move to the all-time high supply zone, which is again a smaller time frame supply zone. Remember, it's not a turning point; it was a corrective move that we had, and that is the demand zone from where we gave a new high, we came back, and we are again retracing. Possibly will again move all the way to 15,853 before we could see some sell off. Again, the market is also in a supply zone right now, so you could expect some move down. On its way up, it has formed a new demand zone, so that is where you can enter into short term long positions to target at least up to 15,800. That's the other area from where we did see a fall happening. So this is where you could look at short term income longs, shorts only at about 850, that too with a very strict stop loss about 900. The range for this week could still remain between, let's say, 15,900 to 15,500. That could be the range. So let's say 16,000 to 15,500. And since it's an expiry week, you could see markets moving up, coming down, or it could come down and it could move up all the way here. So trade as per this and make sure new traders don't carry over risky positions overnight. So this demand is still valid. If it comes again, we can still go long at these areas, and you could see a lot of good stocks coming into good areas of demand zone. So in short, Nifty would probably remain range bound at least till Thursday between 15,500 to 15,900 approximately, or 16,000. And maybe Friday we could see some different move coming in. Either it could continue with an uptrend, or it could change the trend down for a different target on the Nifty of, let's say, 15,300. All right. Looking at Bank Nifty. Okay, so Bank Nifty, as expected, and as we discussed in our last session, this is the area from where Bank Nifty has moved up. We said this is a good area of demand. Bank Nifty came in on Friday. Today again, it tried to retest those lows and closed with a strong bullish candle on the daily chart. Though we do have some supply zones, but these supply zones might not push it far down. It might just give a corrective move before it starts moving up. Uh, that's the uh, that's the area where Bank Nifty could move to 36,655. Maybe not this expiry. This expiry, it could still remain range bound between 36,000. That's the area, 36,000 and probably 34,000. That could be 2,000 point range, which we could see in Bank Nifty for the next few days before it takes a turn. So new outlook probably on Friday after this expiry is over. Because of expiry, they could remain range bound. If I go to the smaller term time frame, we are now coming into this area of supply where it is possible that we could see a reaction coming in. That reaction could push it down to this area of demand on the 75-minute chart. So that's where it could again come back, move, oscillate here before it tries to break off, and that's another supply zone on the smaller time frame. So multiple levels of supply zone on the bank nifty, but good for short term trading. You can do a lot of intraday trading with a 200 point reward and 100 point risk. Maybe try to see if you see some bearish pressure coming in, quick short for a 2:1 reward to risk ratio. Or if we come here, open again negative tomorrow, come here into this demand zone, not a bad idea to go long at least up to 35,000. This demand zone still holds good. That's the a smaller demand zone that's snugly fit along with the daily demand zone. So multiple demand zones, multiple supply zones. So expect Bank Nifty to still be range bound for the next few days, or at least this week. So I hope people had taken some position when Bank Nifty came in here for the long side. CNXIT last week was quite powerful, but this today it actually opened. Last Friday it gave a it opened high actually, and started selling off. We could see some corrective move coming in the IT sector, and banking sector could move in this week. So that's the demand zone for uh, Nifty IT, wherein you can buy some good quality IT stocks like maybe an HCL Tech or an Infosys if they are pulling up to a daily demand zone, a good area to go long on the Nifty stocks on IT Nifty stocks for a short-term income. Maybe you can even take a look at some of the mid-cap IT stocks. They might give you better reward to risk ratios. On the sell side, you can look for short-term income or intraday shorts at these areas for Bank Nifty, for Nifty IT. So that is quite possible. Though this is going to be a little aggressive in nature, you could short here with a small risk to target at least let's say about 27,900. So that could be where a Nifty IT will come in. So remember, if the banking index moves up, probably Nifty IT will start correcting again. It's not going to be like a turning point. It could be just a small correction coming in before this starts moving up. So but most of these stocks might remain range bound. TCS, Infosys are at all time high. Even Techem is closer to its all time high. So be careful trading on the long side until we reach about 27,800 on the Nifty IT index. Pharma index, after a good corrective move, as we discussed in the last market pulse session, has now come down to this good area of demand, which is also not a great weekly demand, but from where we gave a new high on the pharma index and actually even broke the prior top. So today, if you see, it opened gap down again into that area, which is still holding up and started to move up. So that's quite strong. But maybe you might want to still wait for more confirmation for pharma index. Once it goes beyond 14,200, that's when you can initiate some long positions. Take a look at Dr. Reddy, Biocon, and other stocks, which could provide you good swing long, or at least a short-term income long, up to at least 14,400 to 14,500 on the pharma index. So still bullish, short-term income, but maybe a new high is still not known. It could remain. That profits could be up to this area here. That's 14,400, and we are forming a demand zone on the 75-minute chart. So possibly once it hits this supply, maybe it goes in deeper, comes back. Here is where you can again initiate some long positions in the pharma stocks, and then target up to first target of, let's say, 14,300 and a second target of 14,000. Bullish yet cautiously bullish. You can look at weaker stocks to short at this area, and once we take this off and at a pullback, you can take a look at longer stocks to go long in the pharma sector. PSU Bank. Now, this is one of the strongest sector that has been doing pretty well. Avoid shorting any of the PSU stocks. Maybe something's cooking up in the PSU stocks, and we had a nice run for the last few months. This week, again, after last week's fall, it has erased all the week's loss in just one single day. So that's quite a bullish candle. Any pullback into good quality PSU stocks, you can go long. Maybe take a look at Bank of Baroda or a Canara Bank or even a Punjab National Bank to go long. So we do have a demand zone that has been formed here. The supply, once it is taken off, you can then aggressively go long on the PSU stocks for a good new target, which can be around, I would say, at least 2710. We are at 2477, so quite some move. And once we go beyond 2710, 2750, all most of the PSU bank stocks will start rallying. So there's a lot of room left. Something's definitely cooking. So every pullback opportunity, try to go long. Even you can have short-term income long in stocks like State Bank of India and Bank of Baroda. So bullish on the PSU bank sector. Energy sector was positive today. Uh, Came back last week. It was a little bearish in the sense it corrected and hit the demand zone on the daily chart. That's the demand zone which we had identified last week, nicely moving up from that demand zone. But as it has come down on the smaller time frames, you would see some good supply zones that are being formed. So maybe that's where energy stocks could lead to in the short term. So remember, it's an expiry week, so most of the stocks could remain range bound. So don't expect huge RR. If you have the capacity to hold, then you'll have to probably hold till Friday for bigger gains, depending on how markets move. No good quality supply zones on the smaller time frames except for this. So once we go beyond 20,765, maybe this could also give a new high. So still bullish on this. But wait for pullbacks to go long on the energy sector. FMCG. Now, this was the sector which we were bullish last week. And if you have seen some of the stocks of this FMCG sector, they have done really well along with IT. So last week, our theme was IT and FMCG sector. This week, the theme could be Bank Nifty, PSU Bank, and maybe infra stocks, which could move up. So again, this is an all-time high index, still moving up, still no shorts without confirmation. Every pullback look to go long. That's the demand zone from where we went up. But on a 75-minute chart, we have a very beautiful demand zone. So you can get into good stocks on the FMCG under the FMCG index once it comes here. All right, but wait for pullback. Don't jump the bandwagon and buy at market having a FOMO feeling. Markets will pull back if they have to go up, and they will give you opportunities to enter long. The finance, CNX finance, again, this is pretty much correlated to the Nifty, Bank Nifty index, a similar move as we saw. Again, this is what we had marked in our last session, nicely moving up from that. Bullish outlook towards the financial services stocks. New demand zones have been formed after breaking the supply, so could expect it to move all the way to 16,900. So on pullback, again create new positions on the long side for the CNX finance stocks. Auto has been a little bit subdued the last week, and today also, though it moved up and could not break Friday's low. That is one good sign for the auto sector, that this is not something a great demand zone that I would really rely on. The demand zone that I would still rely on is here. That's around 9,900, another 500 points. But if it starts moving up, we could have new demand zones coming in. and that's a valid supply there. So that is the range that you could see for the Nifty Auto for this week. So between around 10,700 to 9,900, that's the range that you can play. Longs only on confirmation, don't be in a hurry. Any pullback with good quality stocks coming into a good quality and downtrending stocks coming into supply zone, you can take some short trades there. But longs would be better at around 9,900, 10,000 level. CNX Infra. Now, this could be one of the uh, indices which could be moving up pretty strongly. On the monthly, there is enough room for this. Even on the weekly, there is enough room for the infra index. On the daily, last week though, we did correct on the infra index, but it has nicely started moving up from all these areas of demand. So there are multiple levels here. That's why I'm marking the whole thing together. Um that's the area where we could see some profit taking or a pause because it has broken few demand zones. So might halt here. So that's the range for the infra stocks. So any pullback that you get tomorrow, day after tomorrow, or on Thursday during expiry, if you get any pullback at these areas, that's where you should think of going long for a first target of, let's say, 4,500, but your long-term target or the medium-term target could still be 4,700. Again, like Nifty and every other index, it's formed a new demand zone here. So that is where you can look for a pullback to go long in some of the infra stocks. And there is a supply zone, but I'm not too worried about that supply zone since uh, it's an uptrending index. So once this supply is taken off, if you go long here, that would be your first obvious target, and these would be your second target. But once it goes beyond this, you could see new highs coming in the infra index, and and some of the infra stocks could post new highs, or they would still continue moving up. CNX Media. Okay, CNX Media again it's a slow mover. If you see, Nifty index has gone beyond its prior high, but it is now this index is playing catch up. The CNX Media Index, though we don't see too much of room in here for the CNX Media Index. That's where we are right now on the monthly chart, and that is where we have good demand areas on the monthly chart. So that's a range for this month, or probably even the next month. It could be this range, unless this supply is taken off. Once this supply is taken off, which has been tested multiple times, you could see a move to 2400. That's when you can go aggressively long. Uh, on the weekly chart, if you take a look for media, it is still range bound. There could be some corrective move coming in from here. So look to go long from swing trading opportunities or perspective at around 1700. I don't know whether it will correct that much because most of the indices are showing good strength. But I would probably take a look at the banking or the PSU index rather than take a look at the media index. You can give it a pass as well and wait for some new high quality demand zones being formed. Now that's the Nifty Realty Index, which again we saw last time. It's in a supply zone, corrected, came into the demand zone on the weekly chart, nicely moved up here, and on its way up, we have formed some areas of demand zone. So aggressive longs can be taken at these areas for the realty stocks, with first target at around 357, and second target could be at all the way up to 365, 366. But cautiously long approach. Don't be in a aggressive mode with the realty stocks. But yes, still bullish. Maybe once this daily supply is taken off, you can get aggressively bullish for higher targets. But still, you need to wait for these stocks under realty sector. Mid cap, again, as we discussed, moving up nicely, all-time high scenario. Had a good pullback into an area of demand. That's the area of demand where it had a good pullback. Moving up, that's the area where it could, for this expiry, remain in a range, or it could even break. But no shorts allowed. Any pullback that you get at these areas of demand zones, look at good quality stocks which are trending up on all time frames, and go long for a target of around 27,430. That could be the target that you can look at for your short term trading for the mid cap stocks. Most of the stocks are still holding their demand zones, which are trading in good higher time frame weekly demand zones. The small cap index, again similar to mid cap index, no change, came back to our areas of demand, started moving up from there. Once it goes beyond 9700, you could see new highs being printed. Cautiously long approach right now. Wait for some more price action on new demand zones to be formed, as on the 75-minute that is a demand zone, though aggressive. uh, you can definitely play some short-term income setups here for a target of, let's say, 9770. That's still possible. Metal index, now this is one of the weaker index. Last week it sold off quite a bit, and if you take a look here on the metal index, let me remove all. That's the supply zone which is still holding up. Now remember, this is just a point from where a corrective move has happened. It is not an authentic supply. A price hit this demand zone, so that's the demand zone we have here, and is again started to move up. So on the metal index, what you could see is it could still be range bound between 5,000 and 5,500. So when it comes to the lower range, you could take short-term income longs. When it comes to the upper range, take confirmation shorts, or then book your longs and wait for prices to break this, because it's an all-time high scenario. And again, you will see new highs been printed. On the weekly chart, that's a good area where you can expect to go long from swing position, or even in cash for good return on investments at these areas. You can look at stocks like Tata Steel, SAIL, or even Jindal Steel. These could still be doing well in the long run. And the last is the India VIX. Remember, VIX is quite low. It dropped all the way here below 11 and started moving up. It could still continue moving up slowly. So that's the area of supply for the VIX. If you take a look here, it hit that on Friday, came down, and today also it came down. So if VIX remains below 5, you could see market slowly gliding up. But once it starts moving up, markets could start coming closer to the lower end of 15,300 to 15,500. So uh, don't be aggressive for swing positions. It's a short-term income trading time. Take positions once market comes in the lower range, and book your profits, and you can even go short in some of the weaker stocks. So that's it for the week. So I'm this week could be good for the banking, pharma, PSU bank, and even the energy sectors and finance sectors. So hope that helps. Thank you, everyone. Have a good trading week. Trade well and trade safe.